So hello guys, and now we go with the 90-minute cycle, the objective of each one. So let's go start with the first one, which is from 2:30 a.m. to 4 a.m. EST, New York time. So the main objective of this cycle is move the price to those liquidity pools, boys. And remember that between 2 and 3 the CLS distributes the order of the forex pair that are connected to Asia. So that's why between 2:30 and 4 you are not going to have like a lot of volatility with those European pairs like EURUSD, GBPUSD, you know, those European pairs. And yeah, I must use this cycle to like collect information and see if the second cycle could be tradable or not, because like I said, between 2:30 and 4 you won't see, maybe sometimes, but no most of the time you won't see a lot of volatility between 2:30 and 4, because like I say, CLS is focusing on those Asian forex pairs, and that's why most of the time between 2:30 and 4, between that time, the London session could create the high of the day or the high of the session. You know, when the London session takes Asia high, and it has a big probability to create the high of the session, or takes London the low of Asia, and it has a big probability to be the low of the session. That's because between 2:30 and 4 there is not a lot of volatility. So imagine the price is running to those stops of Asia high. It takes Asia high between 2 and 4, and when it comes to 4, the CLS start distributing for those European pairs. So that's why maybe sometimes price takes the Asia high, creating the high of the day, of the high of the session, and it just start to coming back. Imagine it takes Asia high, and after that it start to going down, creating the high of the day. So like I said, I use the cycle most to collect information and see if the second cycle could be tradable. Why? I'm gonna show you now. So imagine, like I say, the main objective of this first cycle is to take the price to those liquidity pools, or to those points like fair value gap, order block, or to take those high, those low. So imagine we've got this 50% of this 30-minute fair value gap. We got a lot of imbalance here, a lot of fair value gap here, and we have this order block that made this big movement to the upside. So now look what the 2:30 90-minute cycle does. Here we got 2:30 here. Look what it does is it doesn't have like a big volatility, but now look how the 2:30 yen go down, taking Asia low, taking that liquidity from Asia low, and from those lows coming to the fair value gap here, to the 50% of the fair value gap. And after that, just look how 4 in the morning, the second liquidity cycle is starting, and like I told you on the chapters before, we wait 30 minutes. Okay, we wait 30 minutes to collect information to see a sweep or a break in the structure. We wait 30 minutes, we can see price sweeping this low, coming to the fair value gap, exactly at 4. You can buy here, that's not a problem. You can buy at 4, starting the first cycle, or you can just waiting for the breaking structure here, then the price come back to the order block, to this other block that took that low, and then you can place a buy, let's say 240, 230, maybe somewhere here. Okay, you can place a buy here with the stop loss below the low, because if not, that's not going to be realistic. And you can put a take profit, I don't know, to the middle of Asia, or Asia high, something like that, and you're going to have, you will hit TP. So yeah, that is basically what I'm explaining you here the two cycles, but yeah, that's what the first cycle does. What it does is it moves price to take those highs or lows, the Asia high, the Asia low, or basically moves price to those liquidity pools as fair value gaps, all the blocks at those points. After that, we can start trading the second cycle, because I don't really trade the first cycle, only if I see a plus trade, but I don't really trade the first cycle. I use it to collect information to see where is it delivering the price, and then at fall I start really trading. Yeah, that's it. This is the main objective of this cycle. Now, the second cycle of the London session. Simple, like I told you before. On this cycle is when the CLS distributes most of the orders of those European pairs as EURUSD, GBPUSD, EURGBP, etc. So on this cycle is when the biggest movement of London happens. Okay, imagine that in the first cycle, what the CLS did was delivers the price to those liquidity pools, to those points at fair value gap, all the blocks, and then in the second cycle is when the biggest movement is gonna happen. It's when, okay, imagine the first cycle, price took the CLS took the price to a fair value gap, taking a shallow, and now on the second cycle, starting from 4 EM, they gonna use, imagine, that other block to pump the price, okay, to of course take, I don't know, some others highs, anything. So these cycles, I call it the big move. Okay, it's when most of the volatility of London happens in this cycle from 4 to 5:30, because like I say, the CLS distributes most of the orders of those European pairs. Yeah, this is basically that. This is why these cycles is the one I trade the most. Okay, this is the cycle I must trade, because there is a big probability of having a big move. Okay, now let's go to the chart. This is the same cycle I showed you in the last one, because it is very simple. So per cycle, took the price to the fair value gap, taking the Asia low, and now we wait for fall. What we have here, we have price taking the low, then breaking a structure. We're waiting for the 30 minutes to see what price is gonna do, to collect information, and then 4:30 we have the buy. Okay, from 4 to 5:30 we can even take partials here, and if we have a context, the price can go to take all those highs above, we can just leave it, because like I said, not always it's gonna be the same. Okay, not always it's gonna be the same. We need a context. That's why I'm telling you this. You not always it's going to happen this. Okay, maybe another day price is gonna take Asia high, and from there it's gonna reverse. or maybe another day, what price is gonna do is it's gonna take Asia low, it's gonna have a retracement to the fair value gap liquidity pool, and at 4 there's gonna be another sell, because here you don't have like a fair value gap, another block, or anything that can stop the price. So you need a context, but the most important thing, you have it, which is what? The times. Okay, the times. You know the times, you know what time you're gonna come to the charts, and you know what you're gonna do. You know what you're expecting from the first cycle. Now you know what you're expecting for the second cycle. What can you expect from the second cycle? I can't tell you like there is always gonna be a buy. There is always gonna be a sell, or there is always the price tapping in a fair value gap, and there is always gonna be the same, because that's not true. Okay, and that is not gonna happen. You are gonna need a context. You have a context here. Okay, you know the objective of the first one. The objective happened, yeah. Price took the CLS took the price to the fair value gap below, taking those liquidity pools as a shallow. And then what you have at 4, you wait for the 30 minutes, sweep, breaking a structure. Now you have a context to buy. Okay, now you can place a buy, then you buy, and then if it goes stop loss, no problem. You wait for the next day, you wait for the next London session, or you wait for the next for the New York session. With the cycles, I'm gonna explain you in a minute. But yeah, you not always is going to happen the same thing, but if you know the objectives, you can come to the chart every day, make a context, and make a buy or sell. You know what is bad? You come into the chart and you not having why the price is doing what he's doing. Okay, you say, okay, price is going down, now I'm going to buy. But why are you gonna buy, or why is price going down? When you know everything that is happening with the price, when you know why price is going down, and now what it is tapping in the fair value gap, why at 4 there is a buy happening. When you know all of that, it just becomes beautiful, like knowing everything that the price is doing, the logic behind anything the price is doing. Like now I'm talking too much, but yeah, we go to the next cycle now. Now let's go with the cycle of London session, which is the one from 5:30 to 7. Okay, we know that at 7 starts the New York is the New York opening price, and this is the cycle, I will say, the most irrelevant cycle. I don't really trade it, and there is no like objective of this cycle, like there is no a logic behind it. I haven't found. There may be, but to be honest, and I'm not gonna come to you and teach you things that doesn't happen in the charts. I haven't found something with this cycle that I can say like, okay, the main objective is this, of the main purpose of the logic behind it. No, that's not this. I use this cycle just to imagine when I place a buy in the cycle before the cycle starting from 4 in the morning. I must use the cycle to like take partials, or to follow all the flow of the cycle before. But really, to be honest, there is no logic behind this cycle. I must use this one to collect information and see what is gonna happen on New York. You feel me? Like I start to preparing to New York on this cycle, but there is no logic behind this cycle. No, for me. Well, for me, I haven't found one. It's most like, okay, you place your buy on the cycle before, and there is a continuation profile or reversal profile. From there you can like keep buying. Oh yeah, there is true that at this cycle there can be like a draw on liquidity or a new setup that would be formed. So I use this cycle most like scalping. Okay, if I see a setup in like the 1 minute chart, the 3 minute chart, at this time I trade it, or I follow the order flow from the cycle before. Then like I said, this cycle you can use, like if you see a scalp setup, you can just trade it using the time, which is the 530. You can improvise. Yeah, but let me show you this. Okay, this is the first cycle starting here, 230. Now what the cycle does is take the price to those liquidity pools, to those points. Now we have this other block here. Okay, the other block there, taking this short-term low here, and of course we should have a context which is that we have this low here, this previous day low. So imagine that we aim into this low, to the previous day low. So that's why we're looking for sales. Okay, so imagine you're looking for sales and you don't trade the first cycle, because you know the cycles, we don't trade it. We wait for it to give us information and then trade the second one, which is the cycle is gonna give you the best move. Okay, the biggest move. So we wait for the first cycle to take the price to those liquidity pools, taking any high, tapping in another block of a value gap, etc. So price between 230 to 4, this is here 330, taking the short-term high, tapping in the other block, and then what we can see, price just going down, and what we got here, 4 here. Okay, this is 4, so you can place a sell here. You can start it going from 4. You can just wait. You have 410, 418, 420. Yeah, you have 430. This other block it's not going to be the best trade, but you can just follow the other flow, you know. Okay, you follow the other flow, another sell there. Price came back to your break even. Price came back to break even. Imagine that kick you out, then you can just wait. 530 here, you can place another sell, and then, you know, keep selling, just keep following the other flow. So here you like I'm just showing you a full London session, like the context behind it. Okay, you have the previous day low here, the first cycle moved the price to this other block, and then you have this 4 EN sell here, this possible sell to this BPR here, and then you can just follow the other flow, the 530 third liquidity cycle of New York of London session. Is follow the other flow until, well, this is 630 until somewhere here. So now what I'm gonna show you now is the first cycle of the New York session. Okay, you're gonna love this. Okay, I know you are gonna love this one. I'm gonna explain you now, because yeah, this cycle, this London, starting from 530, there is no much logic behind it. It's more like, okay, if you see something cool, if you see a scalping setup, trade it, or follow the order flow with the context you have, with the context you've been trading. But the first cycle of New York, I know you're gonna love it, because right here it wasn't prepared. Okay, it wasn't prepared. I just came, but I'm just watching here that here you've got all these cycles perfectly. Okay, and yeah, now we're going with the first cycle of New York, which is, so yeah, here we go with the first 90-minute cycle of New York. This cycle is, as you know, from 8 EM to 8:30 EM, and here comes the big part. So I call this cycle the fake move. Okay, the fake move. Why? Between 7 yen to 830 yen each time there is a fake move in the market, making people think the price is going to one direction, but it is not. ECT calls it market protraction. Market protraction. Maybe some of you, maybe no one, I don't know. But if you watch that video of ECT saying that I'm saying London time, at 7 a.m. there is a fake move that makes people think the price is going to one direction, but it's not. And he calls it the market protraction. So yeah, basically at 7 a.m. between 7 a.m. 7:30 until 8:30, what the CLS does is moving the price to one direction, and then at the second cycle of New York there is the real move. Okay, yeah, of course, like I told you, this is not always gonna happen like this, but most of the time, okay, I promise you, most of the time, go and check and study the charts. Most of the times a fake move on the pre-New York is gonna happen. Okay, so why this? Why a fake move happens at 7 a.m.? Because New York opens at that time. So a lot of people start to trading at that time, even ECT traders, because yes, we know the New York kill zone is between 7 to 10. 7 to 10 is the New York kill zone. I am in a lot of ECT groups, and sometimes I see a lot of people trading starting from 7, placing buys, placing sells, and hitting a stop loss. And what they don't know is that there is a market protraction, okay, which is a fake move, making all of them think price is going up, but at 8:30 it goes down, and vice versa. So now I'm gonna explain you this. We move to the charts. Now here we are. So yeah, this is the same chart I was explaining you, because yeah, I'm gonna explain you some other examples. But look at this. Okay, now we have 7 here, 7 yen here. This is the 7 yen here, and look how they take the price. They deliver price down, 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 down. So imagine those lot of people, retails and smart money traders. The retail is trying to sell here on this fucking, I don't know, support, resistance, how they call it, on this fucking support. Now they're gonna call it resistance. And now the smart money traders, I'm gonna try to sell here on this other block, and I'm gonna try to sell here on this other block, on this other block. But what they don't know is that this is the protraction market phase. This is the fake move. Okay, this is the fake move. The CLS is taking down price on purpose, making they think price is gonna keep going down, and they're gonna try to sell here, to sell here, to sell here. Even the retail traders, even the smart money concept traders, they fucking capping everyone. Okay, and then what time you have the buys? 8:30. 8:30 you have the buys. There you go, have your buys. Now I'm gonna show you another example. Now here you have another example. here. This is 8 here. Now what they do is look how they're moving. They're moving price down, they're moving the price down, 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 down. Then it comes to 830, 840, I don't know. Look how they moved the price down, market protraction. Okay, the fake move. It hit 830. But it's not always going to be perfect. We got 850 here, 845. But at 830, you can see how the new boys start to go into the market. New boys from 830, and there you go, all the people that entry here was copied. All these people out. Yeah, basically then you can have another continuation here on the fair value gap at the cycle of New York. But this one I'm gonna explain you in a minute. But yeah, this is what I want you to understand, that between 7 to 8:30 there is a market protraction. There is a fake move in the market. They try to make you think price is going to one side, but it is not. And yeah, now we're going to the next cycle. So now we go with the second cycle of New York, which is the one from 8:30 ENST to 10 ENST. So this cycle of New York is used most of the time when news comes to the marketplace. As we know, the news accelerates what is already going to happen. So yeah, you can use the cycle when there is no news, because 8:30 after the big move, the fake moves that happens on the first cycle of New York, 8:30 comes to be a very nice time to trade. Okay, 8, but we wait 30 minutes. And at 8:30 we can start to trade. Now I'm just gonna tell you that, yeah, New York starts at 7, but you trading should begins at 8:30. And why? Because 8:30 or after 8:30. If you want to play safe, after 8:30. Why after 8:30? Because at 8:30 there is always news, even small news, big news, but most of the time there are big news coming to the marketplace. So we use the 8:30 EN EST cycle as we wait for the news and we trade them, or we wait for them and then we play safe. Because yeah, we know that the news only accelerate what is already going to happen. If the price is gonna take highs, this is gonna take those high but quicker. We better speed. That's what's gonna happen. Okay, that's what the news does. So that's how we use the cycle. We use the cycle based on the news. Example I've got here for you guys is this one. This was a trade. I took, like I said before, I posted on my Telegram group. And yeah, of course you already need to have a contest. I already explained you this, but look at this, how we go here. 8:30, 8:40, 8:30. The boy, this day we had, I can't remember the news we had this day, but we had red big news. And once I saw this low was taking, tapping the fair value gap, and we have this basically by side liquidity equal highs here, that was like they're gonna take price to take those highs, to take all that liquidity. And we just wait for 8:30. We wait 8, and then we wait 30 minutes. We wait for information to come. We collect information. We can see price took the low, broke the high, the short-term highs, then come to this type of other block that took the liquidity, and then we see another break of structure here, coming to this fair value gap, and then you have the buy. What time? 8:30. Use the news only accelerates what is already going to happen, so that's not a big deal. Okay, when people say, oh, I'm not gonna trade because there is red news, I'm not afraid of news. Okay, maybe NFP, maybe NFP, yeah, okay, news just destroys everything, but news like this, like no NFP or no funk, you can trade them. If you see price, if you think price is gonna take those highs and you already saw a sweep, you already have a context, just go for it. Okay, just go for it. If the time is right, just go for it. And yeah, that's basically how we trade news. We wait for how we trade the second cycle. There is no always going to be news, and that's okay. You can just wait for the 8:30, and if you see a nice trade, you can just trade it. If you see a token liquidity, break a structure, or you see equal lows, equal highs, you see liquidity above, liquidity below, just trade it. Okay, have a context, wait for the 8:30, and from 8:30 just trade it. Okay, I don't recommend trade the first cycle, which is the 7 yen to 8:30 cycle, because as I told you, it's a fake move. Yeah, sometimes I trade a cycle, because imagine we are here. Imagine this is okay. Imagine this is 7 yen. Just imagine this is 7 yen. So if I want to buy here, because I feel like here buys are going to happen, I trade the 7 yen selling, taking the price to the point, to the fair value gap, to the other block, and then when it comes to 8:30 to the second cycle, I buy. So it's like ping pong. Okay, it's like ping pong in price. Okay, 7 yen is the fake move. I trade the fake move, faking all those peoples, and after that, what I do it, I trade the other one, which is gonna take all the liquidity of the cycle before, and that's how I correlate the cycles. The first cycle of New York, the fake move. The first one. The second one, when it comes with the news, the real one, the big move. Now when it comes to the last cycle of New York, which is from 10 to 11:30, there is two ways to trade it. Okay, there is two ways to trade it. The first one, and it's the most safe to trade, is that when big news or when a big move happens on 8:30, when I listen to this, please, because this is very important. You won't hear this source on any other YouTube channel or from any other guy. When big news and a big move happens at 8:30, as this one here, what thing is gonna do most of the time, is take all those orders, all those stops, and all those people try to trade a move, because most of the people is gonna try to trade it, and most of the people, they have their positions here. They were selling here, selling here, selling here, selling here, or they just have position here, or they now are going to have, or they now are going to try to sell here, because they see the other block, they see the balance, they see all the shit. So when a big move like this happens, and I'm gonna show you other examples, so you will see this is no This is no cap. When you see a big move like this at 8:30, what you can expect from this last cycle of New York here. So think here. Let's say 10:30 because as we know we wait 30 minutes to collect information and to see what price is gonna do. 10:30 here, what the price do is take all those stops here, and taking this because this is a trap. Okay, this here is a trap, and here we go the 10:30. Yeah, this is from 10, but 10 is here. We can't do anything here. We wait 30 minutes, we wait price to tap in the fair value gap. 10:30, there is the buy. To take what? To liquidate the big move from 8:30. I'm gonna show you another example here. Okay, so here we have around here, we got 10:30 here, 8:30, sorry, my fucking English. 8:30 here. Okay, this is 8:30. So look, the big move. Okay, it was probably a fucking new or a fucking institution putting orders. Well, the CLS putting big orders on the market. So what 10:30 is gonna do? Look here, 10:30, 10 here. What they do is they take all those orders here, all those people trying to buy here because they see the big move, and all those people trying to buy there. And then look at 8:30, 10. What they do is they fake all of them, tapping the fair value gap, and then the real buys happen. Here you can start buying here. 10:20, 10:25, 10:30. There you have the buy. Then I'm gonna show you another example here. Where is it? Here. So 8:30 here. Okay, 8:30. This is 8:30. And what happened? They took this high. Cool. 8:30. A big news coming to the marketplace. They dropped the price. But then look what happened. Price tap in this other block at 10. Okay, like I've been telling you, it's not always going to be perfect. It can happen at 10 or 10:30. So 10, what you got? The other block, 10, the last 90-minute cycle, and what they do is they move the price to take all these orders here, like I showed you before. All the people that sold here, all the people that is now trying to sell here, they're gonna take all of that. Look at this fake reaction, and then boom. Then after the sweep, you can start looking for sales and all of that and blah blah blah. But yeah, this is one way. This is one way to trade the last 90-minute cycle of New York. Okay, from 10 to 11:30. And the other way, if you simple as have a context and know where you can place your buy or yourself. You buy or you sell. This is simple as, okay, we go 8:30 here, we didn't have news, we didn't have all of that, but what we got is a buy profile. Okay, price is most likely to type in this OB, and now we got this high here, which is, imagine, buy side liquidity, important high in anything. So imagine the 8:30 tapping on this other block, and we go at this high here, which is most likely to be taken. We use high as liquidity, and now what we expect, okay, you could start buying here 8:30, 8:45, now 9:30. What just happens is that 8:30 comes here, we got the fair value gap here at 10. I don't know why I keep saying 8:30, but here you got 10 fair value gap, you could place a buy. Now if you want to wait for confirmation, you can just wait, price come here to this big order block, whatever you want to call it. In the seconds you will see a favor lookup here. In the seconds time frame you will see a favor lookup here, order block, and then 830 another buy to what? To take that wayside liquidity. And this is the second way to trade the last cycle of New York. Like I told you, there is no much logic behind it. Yeah, the one before I told you that there is a lot of logic behind it, but this one is only like as a context. Is the price most likely to go up to take a high, or most likely to go down and take a high? If it is most likely go up and take a high, so use the 10-30 as points to take a trade. If you see a trade at 8:30, 10, you just take it. And then this is 11. The price just finishes the delivery here because this is 11:30. So this cycle is from 10 to 11:30, and here as you can see, the CLS just basically close it all those order, and that's why you start watching this and you start seeing this push down and this consolidation. There is now no much volatility because the CLS already closed all those positions. This is basically the other way to trade the last cycle of New York, and basically those are the objective of each one and how you can trade them. How you can trade every of these cycles. Basically there is no like a full big secret that I will tell you, okay, at this time you are always going to buy or you are always going to sell, because that's not gonna happen. You have to put the hard work and you have to, to study. But you've got the most important thing. You now know how to trade the 830, why we trade the 830, how to trade the 10 one, the 90-minute cycle that starts at 10. If the 830 does it, how you gonna trade the next one? You know that. Okay, you know that. And as you know the times, that's the most important thing, because you won't be trading at, let's say, you won't be trading at 11. Okay, you're gonna wait for the 10, and better you will wait for the 10:30, because we wait for those 30 minutes to give us information, and from there we just place a buy or sell. Because what the 90-minute cycle does is, listen to this, the first 30 minutes they just manipulate, or they just like, I won't say they figuring out what they're gonna do, but they making a structure. Okay, they making a structure. They just maybe consolidating and waiting, and after those 30 minutes they distribute the price. So basically the 90-minute cycle is basically a 60-minute cycle of distribution and a 30-minute cycle of basic structure. We wait for the structure to be formed, and then from the next 60 minutes we distribute the price. Well, we don't distribute the price, the CLS distributes the price. And well, that's basically all about this 90-minute cycle. And yeah, on the next chapters we'll be showing you more, but yeah, this is all for this chapter.